Well, Meta shares, meantime, hitting an all-time high today, jumping 20%. Huge move after the company reported a tripling in profit for Q4 and announced that they would pay investors a quarterly dividend for the first time. Despite this, our next guest has given the stock an underperform rating. Here to discuss is Laura Martin, Senior Analyst at Needham & Co. Laura, it's always great to have you on the show. And that is exactly where I'm starting this conversation with you. Why do you continue to be underweight on Meta?
Right. So what we're looking for in 2024 is three things that we think are not currently invested in the consensus estimates. One is capital spending rising because he's going to try to compete with the big large language models like Amazon's AWS, Bedrock, and Google's and OpenChat. So then also his headcount's down 22%, and he said he's going to start hiring people again. So we're going to get higher people costs as he continues to fund the metaverse. He said his Reality Labs loss is going to go from a loss of $16 billion in 2023 to material or higher. We're using a $22 billion loss, so that's a big cost. And then finally, on the revenue side, they said on the call that China advertisers added 500 basis points to their growth, so they would have reported 11% growth in 23 instead of 16% growth for the full year. They're about to anniversary those tough comps. So I think it slows revenue growth next year. And I just don't think the estimates really capture that. I think they're too optimistic on revenue growth for 24 and too optimistic on cost growth.
Okay, so basically you think that this was a peak report in terms of some of those key financial metrics, it sounds like. But they did initiate this dividend, and they also just rolled out another big buyback. The dividend specifically is going to expand the investor base, no? Create more demand.
I agree, but I think the other thing it tells you is they realize the Congress will not let them buy anything. There is no other use of cash other than building their businesses and hiring people to build out the metaverse and generative AI. But they're never going to be able to buy anything because Congress just won't let them, the regulatory agents. So that's sort of bad. Like you and I would prefer to be buying companies that can buy fast startups to jumpstart there instead of building everything from inside.
But Laura, you got to admit, it would have been better if you had a buy on it and just went to an underperform today, right?
Yep, absolutely. Absolutely the wrong stock call today. Absolutely true.
So what did you read wrong about Meta on the way up? Right, that you learned from, that you think now you're right, that it's going to be headed on the way down?
Right. So, I mean, I think what happened was he cut 25% of his total employee base. I actually didn't think that was possible in a human capital-based business where morale is such an important indicator of who you attract next. I really just didn't think you could cut that much, 25% of your headcount. And that's what he did. And the other thing I really like about this CEO, he's the CEO I've covered that's really willing to pivot on a dime and say, I made a mistake. And he said that last night on the call. He goes, I thought we could do a specific large language model. That's wrong. We got to do a big one. We're pivoting. And that means a lot more costs and a lot more CapEx. But I really think it's the right long-term decision. And I think he's learned that over the last year. So I think he's good at pivoting to what the market needs when he's proven wrong.
Yeah, you've also said that Google, that Alphabet is your top pick. I wonder, in a week where we saw that stock actually sell off, finish the week down about 6.5% after investors really sold in part because of what we're seeing as some misses or some softer than expected results around the advertising, whether you stick with that call too.
Yeah, definitely. Really like Google because of its strategic position. First, it's got cloud. Then it's got 3 large language models that are proprietary. Its cloud business has a $20 billion backlog, had over-delivered both profits and revenue compared to consensus. And I just think what's about to happen over the next 3 years is we're going to see all these generative AI applications essentially redefine corporate winners and losers in the American economy. And the early adapters of generative AI are Google, who mentioned generative AI or AI 65 times, Meta mentioned it 50 times, and Amazon 25 times. These guys that are cloud providers and building large language models are going to be the backbone of like surviving American companies over the next decade.
Laura, Apple ended the week down after earnings, but it also released the Vision Pro. Did it deserve to be down?
Yeah, it did. I mean, first of all, the prepared remarks, not a single mention of AI or generative AI. They said they'd get to it later. And it sort of feels like this annual, sort of release cycle that that Apple has in its hardware feels really sort of out of proportion, given that Meta and Google and Amazon are all saying, hey, we have a dozen products that use generative AI today. And they're really interesting products when they tell you what the use cases are they're finding for these. Feels like the pace of innovation driven by this disruptive technology called generative AI is going to be really fast. And that annual updates feel a little too slow in the competitive environment to us.